increases awareness, and I hope obviously that more businesses become aware and are interested and call us to reduce their overspend. I don't think it's fine that vendors. I mean, vendors are there to make money, to run a business. They're entitled to a margin and pay their employees and make money and pay their shareholders, but in some cases, they are completely price gouging their clients, and I think that's unfair. So over time, I think there is an increased awareness, whether it's, as I said, through these efforts or through other marketing and educational efforts that we and other businesses undertake.
Welcome to the New World Podcast, where we delve into the ever-changing and accelerating pace of global change and its impact on our lives. I'm your host, Paul Flores, broadcasting live from the New World Studio. Today, we're diving into the world of AI and automation. As an enthusiast and expert in lead generation, I will guide you through understanding and leveraging these technologies for your business and for your personal use. And don't forget, AI and automation might be unstoppable forces, but that doesn't mean you are powerless. Tune in to learn how to make them work for you and not the other way around. But first, let's meet our guest. Welcome to the New World Podcast, where we navigate the changing world around us. I'm your host, Paul Flores, specializing in lead generation and AI automation, here to help you understand how our world is changing and what it means for you. Today, we have a special guest, Larry Levine, a seasoned business owner and expense cost consultant reduction at P3 Cost Analysts. Larry is an expert in helping businesses slash their telecom, waste, utility, and various service-related bills, achieving significant savings and enhancing financial performance. And I'm going to tell you right now that is very helpful for a business. In this episode, we'll explore the strategies behind reducing cost to vendor levels and the impact of these savings on businesses in today's rapidly changing world. Larry, it's an absolute pleasure to have you on the show.
Thank you for having me. I'm thrilled to be here.
Awesome. And by the way, I asked this to all the guests before we continue on the in depth questions. Can you share with us who Larry Levine is? What's your expertise, experiences, and what keeps you busy these days?
Who's Larry? So I am a franchise owner of P3 Cost Analysts. I do this full time. We help businesses, as you said before, reduce their indirect vendor spends across a series of categories. Our clients are restaurant groups, auto groups, hotel groups, manufacturers, healthcare facilities, any business, mid-size or larger, that's spending a significant amount of money on some of these indirect vendor categories. Categories include telecom, utilities, waste, uniforms, linens, property tax, leased copiers, printers, merchant processing, and a few other categories. Most businesses are overspending in these categories without even knowing it.
By the way, just a random question. Is that often, when you help a business, is it often that they're actually overspending on something?
90% of the clients we help are overspending by 30 to 40% on average across the board. Some categories may be as low as 5% or not at all, and some categories are as much as 75%. My first ever client was overspending on his waste by 76%. He didn't know it. He told me during our process, he doesn't look at the invoices, he just pays them. And even if he were to look at it, he wouldn't even know what to do with it. And
And but
that's true of most clients.
yeah. And by the way, cost reduction is a very unique field. I mean, it's the first time that I've heard of it. Maybe I just wasn't able to find it earlier, but how did you end up in it?
How did I end up in it?
Yeah.
To make a short story long, so my background, this is my third chapter of my career. If this is okay with you, I started off out of college many years ago, working high tech, various vendors. You'd probably only recognize two of them at this point. Most of these other vendors businesses have been collapsed into or bought by other companies. I did that many years ago. Left that in the early 2000s. Shortly after that, I owned a home care company. It's a franchise. I got a taste of owning my own business, working with partners and reporting to my partners and my employees. So in 2021, we sold that business back to a franchisor, and I had the opportunity to move out of the cold Northeast to the Mid Atlantic. Followed my daughter to the greater DC area, and shortly after that, I bought into P3 Cost Analysts. What's different about this is that while I still own a business, I no longer have partners or customers. My clients are happy to continue to pay me money year after year to help them save a lot more money. So this is exciting to do, and it's a great business. But your point a few minutes ago about not knowing about the cost reduction industry, it's true of many of our clients. They're not aware of that they're overpaying. They're not aware of the need to work with a cost reduction consultant, and to a great extent, the cost reduction industry is invisible.
It is absolutely invisible, but I think it's, very important. Because at the end of the day, if you can make your costs as low as you can, it's easier to scale.
Absolutely. We're not a consultant coming in telling our clients how to run their businesses. They know their businesses, they know their culture. If they're a restaurant group, they understand what food they want to supply, want to serve, what quality of food, what portions, culture, the look, the music, the theme. But they don't necessarily know. It's the same way they don't know, they can't represent themselves in court, or they need an accountant to file taxes, or they hire a social media manager to create and run an online presence. Some are unaware, but they really do need a cost reduction consultant to help them manage their indirect costs, their direct costs, and their indirect costs. We support the indirect cost reduction. Direct costs for a restaurant might include food, chairs. Um, Cut this out. Let me back up. Direct costs for a restaurant might include food and chairs, but the indirect expenses, the expenses that the patron doesn't see, are those categories I mentioned before: utilities, the gas and electricity, waste, the garbage bins in the back, property tax if the property is owned, the uniforms and linens, the tablecloths and napkins, the uniforms of the waitstaff. Those are all indirect. They add to the experience. They're necessary, but you can't order them. You can't eat them. It's not part of the direct experience. And we're here to help them reduce those expenses, again, on average, 30 to 40%. If you have a restaurant group of say 10 or 20 locations, spending perhaps $5,000 a month on all of those expenses per site, which is quite possible, quick math, that's perhaps $50,000 to $100,000 per month. If we can decrease that by 30%, that's a significant amount of money being brought back into the business for the operator, the owners, to uh, to either put into their pockets, to put into their employees' pockets, to enhance the experience, to open a new restaurant, for philanthropic purposes, whatever they want to do with it.
And what inspired you to actually become a franchise owner of P3 Cost Analyst? Because, it's not a field that you were on before, it's a new field for you.
So that's part of the journey that started to talk about before. So after I moved to Maryland, to the Mid Atlantic, I gave that away, and was looking to start a new business. I was looking for a business where there was a recurring income for myself, but is also something that I wasn't that my clients would be happy to engage with me on. So in the home care space, we cared for people who ultimately ended up passing, and the clients are paying us some $65,000 a year on average to keep their family member well cared for, and that's important. But the ending was not a pleasant ending for many of our clients. In this space, I was looking for again a recurring income similar to home care, but I was looking for an experience where the clients, as I mentioned before, were happy to continue to pay us to increase their bottom line. We're not helping them with top line revenue. We're not telling them how to run their businesses, but we could help them reduce their middle line expenses and thereby increase their bottom line. So one of the franchise consultants I was working with introduced me to another business in this space, and I was quite interested in it. And he said that if I'm interested in that, I should check out these two other businesses, names of which I will not mention. One of which is P3, the other one I will not mention. But those other two are two of the three or four major players in the cost reduction space. There are three or four major players, and perhaps dozens of smaller players that are single category expense reduction consultants or have different models, employee models versus franchise models. Um, where this particular model for me, I like the overall model where I have national coverage. If I'm working with the hotel group or the restaurant group, that's around the corner from me, and they have operations, other locations in other cities, and a chief financial office headquarters in, say, Chicago or Dallas or wherever, I can support them. Where other business models I may not be able to do that. So I have national coverage. I have centralized auditing. I'm not responsible for doing the actual audits. Some of our competition have different models where that didn't fit my wishes very well. It works for some people, it just didn't work for me. And the contracts we offer to our clients are very favorable to them, and we can get into that perhaps, but they're very favorable to me as well. So overall, P3 was a great. The cost reduction industry was a very compelling industry, and the P3 specific model offered to franchisees was most favorable to myself.
On which services or bills do you actually help them most often? On average, where you can
So
help them save money?
most often would be waste.
Yeah.
Um, as I said before, 9 out of 10 clients benefit from our services, some 30 to 40%. I would say most clients, in fact, have waste. And we're not talking about an office with a small amount of waste. We're talking about a restaurant that has restaurant waste in cartons. We're talking about a manufacturer that has waste as a result of the manufacturing. A hotel group that has uh, it's a large operation. They're creating a fair amount of waste. Um, and not only is it the most common category, it 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 most reliably is a most often is overcharged, and we can most reliably across the country in most markets return some 30 to 40%, and as I said before, as much as 75%. Another most overcharged category is the uniforms and linens categories. Now, understand not every business has uniforms or linens, but oftentimes restaurants do, healthcare facilities do, some auto shops, they have rags, they have these expenses, and
Hey
they're
Larry,
overcharged.
your
But
camera is off.
it's on still here.
Mic
Let me
test.
turn it off. I'm going to turn it back on.
Can you hear me?
I can hear you. Can you hear me?
I can't hear you.
Can you hear me?
Yep.
All right, but you cannot see me.
Yeah, I can see you now.
All right, when did you lose me? I know
Uh,
that there was a little blip of network performance that I saw.
yeah. A few seconds. I think we were talking about. Oh man, I forgot already. Yeah, I think we were talking about which part you can actually help them reduce the cost.
Yeah, let me think a little bit. You were asking me which category is most popular,
Yeah.
so I'll go back to that. So, if it's overlap, it's overlap. Is that okay?
Yeah, sure.
So the most common category that we find savings in is the waste category. Most businesses have waste, whether it be a restaurant group, a hotel group, an auto shop, a manufacturer. They're producing a fair amount of waste. There are waste bins in the back. We're not talking about paper waste in an office. Medical waste at a healthcare facility certainly we could support as well, saving them on average 30 to 40%. Sometimes, as I mentioned before, as much as 75%. Um, Another very overcharged category, very often overcharged category, is uniforms and linens, as much as 50% on average. But of course, not every business has uniforms and or linens. Restaurant groups, not all, they do. Quick serve restaurants, the type you stand up to order and then you pick up your food, a QSR, less linens and uniforms there. than a sit-down restaurant with tablecloths and napkins. But they have a fair amount of uniform linens. Again, overcharged. An auto dealership group might have rags where we can save them money on the uniforms and linens as well. Every group has telecom, but not every group can qualify for telecom because we have high thresholds there. Cut that last part out. Don't talk about telecom. Sorry. So those are the two most overcharged categories in general. But if you talk about manufacturers, they may have a manufacturer building whatever their widgets may be, whether it's a little toy or automobiles or trucks and train systems. They utilize a lot of utility expenses, hundreds of thousands of dollars per month potentially, and depending on the municipality, regulated or deregulated, depending if it's utilities or gas, we could have a whole other conversation about dereg versus regulated utilities. They may be vastly overcharged in that space. We may be able to save them potentially hundreds of thousands of dollars per year on their utility expenses. So every industry is different, but there's overlap across these industries.
And how has your services actually impacted these businesses?
How do they impact the business?
Yeah.
So once we get started, there's almost no impact to operations on a regular basis. There's no service interruption on the waste, uniforms, linens, telecom. If we're doing a telecom replacement, there'll be some interruption, but that doesn't happen often at all. More often than not, we're not changing your vendors. We're going to work with your vendors on your behalf. You're going to authorize us to do that. We're not going to engage. We're not going to sign any contracts on your behalf. We're going to work with them on your behalf and find billing errors. We're going to find opportunities to reduce expenses, reduce rates, and renegotiate these rates and these terms on your behalf. So there's no change in service. Sometimes there'll be a recommendation to change vendors if your current vendor is not willing to play with us. Um, uh, back that up. Sometimes there may be a recommendation to change vendors if your vendor is not willing to cooperate with us, but that's not often at all. If you're looking to change vendors, we can support that very easily in most markets.
That's awesome. And just wanted to actually put perspective on this. Larry is not helping just save 10,000 a year. He's helping save hundreds of thousands because the clients he help is probably are spending hundreds of thousands as well. So, that's a great benefit for a business.
Well, both are true. We can't
Yeah.
necessarily help the mom and pop corner niche shop around the
Yeah.
corner. They don't have the spends there, but a 5 location restaurant group may
Yeah.
very well be spending a few $1,000s a month,
Yeah.
10, $15,000 a year, and we could help them. Um, the We can certainly help the multi-billion-dollar company manufacturer. This is something you and I spoke about before the call, where they may be a multi-billion-dollar
Yeah.
manufacturer. Let's go round numbers, a $1 billion manufacturer.
Yeah.
We're confident that we could save them $1 million a year, which is a large number, but
Yeah.
it's only 0.1%. It's 1/10 of 1% of their revenue. So it's difficult sometimes to convince them
Yeah.
that it's worth spending their time. So our target market, our core market, is in the 20 million to $100 million space where they have the expenses for sure. um, they may or may not have the staff, they may or may not have the time, but there's definitely an opportunity to save them a significant amount of money on the order of what you mentioned before, 50,000, a few hundred thousand dollars,
Yeah.
and it makes an impact to their business
Yeah.
and it's appreciated. I lost you. You're muted.
Yeah, so basically, the best people that you actually help are the ones that are big enough that the impact of saving a few $1,000 or a few hundred thousands actually make an impact, but not too big enough that even if you save the millions, they don't care.
That's right. I would call it mid market,
Yeah,
and it's often managed by the original owners, and we're talking to the CFOs and the presidents where they care about the bottom line more so than the mid level procurement people, asset management teams that often care about their jobs and might think we're overlapping and taking over the role. That's not what we're doing. We're partnering with them. But the people we're trying to sell our service to, again, who recognize and value the bottom line savings to their business are is a C-suite, and not all the C-suite, the CFO, president, CEO. Often, sometimes we're delegated to somebody else.
Do you see that companies are actually open to the idea of letting someone from outside help them reduce their costs, or are they more closed off for it?
There's of course a mix.
Yeah.
Some clients come to us; they've identified a need. Maybe they have a pain with their uniforms and linens or the electricity. Everybody's pains are different. They recognize they're having a problem, and either are they're unable to make progress with the vendor, either because they don't have the staff, the know-how, the time. They're looking for an outsider. So companies like P3 have a web presence. Will take inbound inquiries. That is a minority of our business, though. So most of our business, most of this industry is outreach. We're warm calling, we're cold calling, we're reaching out to clients. We're reaching out to leads. A great majority of those people are unreachable or disinterested in working with us. And I want to go back to that in a moment. So it's very small minority, unfortunately, today because there's a lack of recognition of that they're overpaying. There's a lack of recognition of the industry are interested in working with us. But those that are, they're of course they're interested in chatting with us, and they make up the 90% of our clients that say that we are able to save some 30 to 40% on average for them.
What are the biggest objections that you actually receive from them?
Well, that was a good point. So of those people we're reaching out to that we're and we know how to target our clients. We know how to identify the restaurant group or the hotel group or the senior living community that probably have the spend. So we know who they are. There's no shortage of them, and it's pretty easy to identify who to reach out to. But the objections that we often face when we're speaking with them is we have a team that already does it. There's no time. We don't believe you can do it. Whether it's explicitly stated that explicitly or not, that's often what's happening. Um, so more often than not, they truly believe that their asset management team or their procurement team or their property manager, every company has different, every business has different titles and roles for descriptions of these people, that they are doing a fine job. And you know what? If you're dedicating people toward it, you're probably doing a better job keeping those rates down than the vendor would prefer you to. But most of them do not understand billing codes. They're not looking at the invoices that are coming in and comparing them to the contracts to know that a particular charge is a valid charge or an invalid charge, a fuel surcharge, and waste, a fuel surcharge, a contamination surcharge, a compactor broken, a mistyped billing code on an invoice is may not be caught as quickly as compared to if you have a cost reduction consultant working with you, and your property manager, your asset manager, your procurement manager is not compensated to spend the extra time to look at this. Most businesses, P3 and specifically, you're talking to me, that we're compensated on a dollar for dollar basis. So anytime we're able to at every point that we're able to reduce the invoice for waste or any of these services, we are compensated for each dollar we were able to reduce this. And again, that's true for most in this space. But your property manager, and I'm not saying anything negative about any property manager, but they don't know what they don't know. Um, we're incentivized to go the extra mile.
Yeah, and most of the time, their teams or their property managers are just on the business of not rocking the boat. Yeah,
That could be true in some cases more than others, but I think in some cases the mindset
yeah,
that that whether it's ego
yeah,
or pride, they don't want somebody come. Well, we're talking about two different things. We're talking about on the one hand, we're talking about the capabilities of the property manager or the asset manager or the procurement manager, how well they know the industry, how well they can negotiate on your behalf, on their business's behalf, and whether or not those invoices being validated against the contract. Um, they often can't do that because they're not industry insiders. Our auditors, for the most part, are industry insiders. They've worked at the uniform linen vendors. They've worked at the waste vendor. They worked at the utility vendor. They worked at the copier vendor, on and on, as a sales manager, as an account manager. So they know how to negotiate, how to read contracts, how to write contracts better than the average person that has not. We also create on a, and I'm not giving you any secrets. I'm not telling you any secrets that we don't tell every client. We have created on a service by service basis. We've created a benchmark database on a service by service basis, market by market basis, line item by line item basis for every service that's offered by every type of vendor. So we're able to take your invoices, like our clients' invoices, and compare them to what they should be paying. Our clients don't know what their neighbor's paying across the street or next door for what is essentially the same service. We, for all intents and purposes, do, and we could take that and go back to your vendor and ask to and negotiate a price reduction down better than you can. Your vendor may have offered you, round numbers, may have offered you waste services for your restaurant for $1,000 per month per location. You might have accepted that. You might have negotiated down to $950 or $900, and we're happy with that in the renegotiation. The vendor was happy you got only $900, where our database might suggest that it should be closer to $500 or $600 per month. We're able to come in there and bring it down over time to bring it down to $500 or $600.
That's good because you can help them because you actually know how much it costs. That's great.
Yes, it's real money. It's really
Yeah.
appreciated for sure.
And can you share with us, if you're open to it, a story about a client? You don't have to name them or even tell us what their industry is, that you saw significant improvements in when you actually came in and helped them reduce their cost.
So there are a few my clients, some of my peers' clients, restaurant group with 70 locations, 75 locations. It's a QSR, one of those quick serve restaurant locations. Um, overcharging their waste over several years, $1.5 million of savings on waste alone. 75 locations. You can do the math to figure out how much that is. 6 location retail shop overspending on their waste again by $6,000 a month. Um, a, a uniform linen, another restaurant group, uniforms linens being overcharged by $5,000 a month, 50%. So it just adds up time and time again. Utility. So in some cases, we're not going to be able to save all that much money, but I had one client talk to me. They're spending, I forget which category it was, but 7 figures a year on, I think it was utilities. 7 figures a year on a 240 plus location restaurant group, a very large number. And he said to me, a small percentage of a very large number is still a large number. And he's interested in pursuing those savings because that ultimately affects the bottom line.
600,000 per month savings is a lot of money, no matter what size of a company you
Well,
are.
6,000, not
Oh,
600,000. 600,000 is a very large number.
oh yeah,
6,000.
6,000. Yeah, but that's still a lot. I mean, to be honest.
There's another story of someone in the pet food supply chain where they're selling raw pet food to someone else who packages pet food. I'm not super familiar, but they're being paid by business credit cards and they were being overcharged by their merchant by several $100,000 per month. And we were able to reduce that by several $100,000 per month, over $1 million a year in savings, just just by examining their business credit card use in their merchant processor. It's just oftentimes you're blind to what you're being overcharged in. We can come in, we could tell you if you're being overcharged or not, and that's another thing that's really cool about us. So, and we didn't talk about this yet, but maybe this is a good segue. Our fee is a contingency fee, so we're paid contingent upon finding savings. What that means is that if we come in and audit 3 categories for you: utilities, waste, and let's say uniforms and linens, your restaurant group, and your utilities and waste are already best price possible. Again, 1 out of 10 clients have the best price possible. You walk away, we don't charge you anything for that. You got a free audit. You walk away with peace of mind that you weren't wasting any money. But for the uniforms and linens in that example, if you were charged $10,000 a month, and we were able to reduce it to say $6,000 a month because we found $4,000 a month of overcharges. You know, inventories are wrong. We found, with uniforms and linens, a particular rag they may be able to charge you six different ways for this rag. They're not going to charge you the cheapest way by default. They're going to charge you something that favors them over you. So those kinds of rate changes we're able to affect in that example save you from $10,000 to $6,000 a month, saving you $4,000. We're going to bill you half of that, 50% of that, for some number of months. We have a few packages, one way or the other, with 36 month and 60-month packages. We can talk about that if we want to, but our fee is contingent upon finding savings. And if there are no savings, there is no fee. If there are savings, we finance the fee out of savings as the savings are realized on a month-to-month basis. So
Let's say, for example, you audit 10 companies. On average, how much of those companies actually have so much on overcharge that it's actually worth it to pursue?
9 out of 10 of them,
Hmm.
9 out of 10
Yeah.
are getting 30 to 40% savings. There may be different kinds of businesses, different geographies, but 9 out of 10 of them are being overcharged. Some are being overcharged a little bit, 5%. Some are being overcharged 75%. On average, it is 30 to 40%. And not all categories for any particular company are in the 30 to 40% range. Utilities and telecom, maybe only five. Our average savings in utility and telecoms is closer to 5 to 15%. Our average savings as I said, in uniforms is closer to 50%, but the spends are higher. So the math works out to an average of 30 to 40% across the board.
From your perspective, do you think companies will be more open to having you work with them, a cost analyst, to actually try and reduce costs, or do you think in the future they'll be more aware of it?
You're talking about our clients or the vendors?
Let's say your clients. Do you think they're gonna be more open in the future for
So
having,
I think you're asking about trends. I
yeah,
think
the trends? Yeah.
certainly with all of my effort and all my peers' efforts and all of our competitors' efforts, there's an increasing awareness of cost reduction. This podcast specifically is going to help, and other podcasts and other videos I've done and interviews I've done, increases awareness. And I hope, obviously, that more businesses become aware and are interested and call us to reduce their overspend. I don't think it's fine that vendors. I mean, vendors are there to make money, to run a business. They're entitled to a margin and pay their employees and make money and pay their shareholders. But in some cases, they are completely price gouging their clients, and I think that's unfair. So over time, I think there is an increased awareness, whether it's, as I said, through these efforts or through other marketing and educational efforts that we and other businesses undertake. So where I would say that this industry is a fairly nascent industry, fairly unknown, fairly, even though we've been in business for over 30 years, and there's a long history there of it starting with only waste and a merger of businesses and other industries, other services being brought in. Even though it's only 31 years old, it is still a fairly nascent industry. And in time, I hope, will become more mature and more well known. And our efforts our outreach efforts and our conversations will be met with fewer objections, and more acceptance.
That's amazing. And can you walk us? I know you're not the one doing the auditing process, but can you walk us through how the auditing process works and explain why it's so critical to your success?
Sure, I'll back it up. I'll talk about the entire overall process from try to keep this quick. But whether I approach a lead, or a client comes into us, there's a discovery phase, a discussion about what we do, what they're looking for, and matching together where there may be some opportunities, and maybe doing some pre-qualification regarding which services might qualify based on spend levels and markets and geographies, and which may not. But soon after that, we'll ask them to sign our shared savings agreement. We'll ask them for copies of their invoices for each of these services that are under audit. Sometimes it's 3 months, sometimes it's a month. It depends on the category that we're looking to save, uh, looking to audit. We'll ask them to sign letters of agencies for each of their vendors, so that allowing them to having them allow us to talk with their vendors on their behalf. Again, we will not sign any contracts on their behalf, but they're authorizing us to chat with their vendors, and we will take their invoices. We'll look at our benchmark database I mentioned before. We'll chat with their vendors. Their vendors know what we're doing. Their vendors are not happy about what we're doing, so sometimes it takes a little while. Sometimes it can take 2 months, 3 months. If you have 100 sites, it may take more time than that. But we may do this in phases and start to implement downstream savings in phases. But at some point during that process, hopefully 4 to 6 weeks, we'll come back to the client with our initial findings report that is suggesting that we can reduce, in this example of waste, your waste from, let's use the old example, from 1,000 or 950 a month if you renegotiated it down to 600 as an example in these 10 locations, hoping to get answering any questions along the way and expecting to get from the client authorization to move forward to actually implement the savings. Once we get that authorization to move forward, we will go back to the vendors and actually ask for new contracts with the new rates and new terms, better terms than they would initially offer to you, eliminating some of these fringe invalid charges. Sometimes the contract has you accepting new rates by having paid those new rates that are on your new invoices. We don't find that to be acceptable. We eliminate some of these. We seek to eliminate some of these terms that are just not in your favor. Again, get new rates, new contracts. Get that from the vendors and provide them to you to execute. You're the client to execute those rates, and then bring those back to the vendor to actually have them implemented. And then it takes another few weeks, maybe a few months, to actually see new rates from the vendors. Once you have new rates from the vendors on your newer invoices, now at this point, we may be 4 months down the line. We'll ask you for copies of those invoices. More often than not, we have access to your vendor invoice portals and can download those invoices on your behalf and verify the new rates are in effect. At that point will be the first time you see an actual invoice from us that we verified that your rate went down from $1,000 a month in this example to $600 a month. You will see from us an invoice for half of the 400 difference, $200 a month. I forget that my example was 1 site or 10 sites, but you won't see an invoice from us until that point. And then we'll continue to monitor those invoices month after month for the term of the contract, for any errors, for any changes that may exist. And if there are changes and you signed up for this particular type of service from us, we'll go back to the vendor to have them correct it again. Some services are more prone to errors than others. We're not sure if it's accidental or intentional. I won't editorialize any further regarding what we think and which industries those may be. But the point is that some expense categories are more prone to errors more often than others. So a monitoring service from us is recommended.
Oh man, I bet when those vendors see you coming on their front door or calling them, they're very scared.
So some vendors have implemented policies since we've started to where they will not allow the client to authorize a third party, us, to talk on their behalf. So it becomes difficult in some cases to negotiate with vendors because they know what we're doing,
Yeah. What happens
whether
then
it's
when
us or our
they have
competition.
those?
I'm sorry.
What happens when they have those contracts so they can't actually, you can't
So
actually help them?
we enable the client to talk on our behalf.
Yeah.
Um, this doesn't happen very often at all, but when necessary, instead of having
Yeah.
our auditor, you mentioned I don't do it. Certainly we have a team of auditors that are doing on a category by category basis the negotiation with the clients. When the auditor is unable to because the vendor is not allowing them to, the auditor will speak through the client. We'll tell the client what to say via email, copy and paste.
That's good. That's good. And yeah, it certainly goes over that barrier. And by
Yes,
the
ultimately we're effective.
yeah,
Um,
your mic is muted. Can't hear you. Uh, I can.
There we go.
Oh, there it is.
I don't know. I don't know how that happens.
And yeah, just please
The
continue.
same happened with you. Not right now.
Yeah. Can you hear me?
Yeah, I can hear you.
Yeah.
Can you hear me?
So yeah, please continue on
So
what
ask
you're
the
saying.
question again.
What was the question I was asking you?
So I can answer it without your asking.
Oh yeah, sure.
Just look at it. Look at. Yeah. Ultimately, I believe we're effective 100% of the time. 100% of the time, we're able to negotiate with the vendors. However, only 90% of the time are we able to achieve
Yeah.
um, cost reduction. And honestly, the other 10% would not have gotten to the point of actually speaking with the vendor at all anyway, because we would have compared the client's invoices with and contracts with a benchmark database and gone back to them and said, hey, you already have the best rates. Um, there's no need. You're
And
muted.
which industries do you see that actually most of the time overspends?
Um, I thought we covered. I think we covered this earlier on. This
Yeah.
we look at. We have about 12 or 15 what we call ideal client profiles.
Yeah.
Restaurant industries. Auto. I'm just going to look at my notes for a moment because I can't remember them all. But the automotive industry, whether it's manufacturing or automobile dealership groups, breweries, commercial property management,
Yeah.
country clubs. You wouldn't think a country club necessarily, but they have uniforms and linens if they
Yeah.
have showers.
Yeah.
They may have water and sewer if they have golf courses. They may have restaurants there. So commercial country clubs for sure. Education, whether it's
Yeah.
private schools or public schools, colleges, universities, lots of spend
Yeah.
there. Cities and governments, towns, federal government, not so much. State governments, not so much. There's more bureaucracy there,
Yeah.
and we look for low hanging fruit. There's absolutely overcharges in those spaces. It's difficult to go after them, and they're not coming after us.
Yeah.
So if they do, we'll help them.
Yeah.
Healthcare, whether it be a hospital, a dermatology group, a urology group, an urgent care group, an eye group, a senior living community, they all have lots of expenses. Hotel group, not just yes, the local hotel, but the local hotel is more often than not owned by a hotel ownership group. So I'm going to drop a name right now. So Marriott, the Marriott around the corner from us, is probably not owned by Marriott Corporate. It's probably a franchise location owned by a hotel group out of another city with a bunch of other brands. It's that company, that ownership group we're looking out for. Manufacturing of anything, widgets, toys, cars, name it. Manufacturers have a lot of utility expenses, electricity and gas to build their product. They have a lot of waste. They probably have to ship these products. I didn't mention before, but one of our categories is small parcel shipping via FedEx and UPS. Restaurant groups, whether it's the five location local Mexican restaurant or the 500 location national operation or the restaurant group that owns 70 brands and 6,500 locations. That's a real one I was looking at just before we got on this call here. Difficult to get hold, difficult to kind of work with them because they're large. They have procurement teams. They have a culture where they think necessarily that they're already handling it, but a small percentage of a very large number is still a large number. And in general, multi-location anything. You know, if they're multi-location anything, they have lots of locations in strip malls or malls across the country. They probably have warehousing. They probably have trash. They're worth looking at. So, and lots of stuff that's necessarily my first ever business, my first ever client. I won't name the industry, but they didn't fit any of the ideal client profiles I mentioned before, but still saved them $6,000 a month on waste
That's a lot. 6,000 a month. That's a lot.
for sure. That's before our fees, but
Yeah.
yes, it's 6,000 a month,
Yeah. I
and
mean,
it doesn't go on forever
yeah. Even after they give you the 50% fee, that's still a lot. I mean, that's
That's
36,000
absolutely so.
on them. Yeah. And I don't think I added this on the question list, but I'm just curious. How do you or how does someone actually talk to the vendor? Do you just call them up and say, "Hey, you're overcharging. Can we, really talk about the rates?"
Well, that's some of our secret sauce. That's some of our intellectual property. So I mentioned the benchmark database. It's no secret we have one, but you can't look at it. Our It's no secret that our auditors are industry insiders. They've worked at the in some capacity at various vendors, but the conversations we they have with our clients vendors is some of our intellectual property. We can't discuss that necessarily. So, but they're having conversations, their phone conversations, their email conversations about above board that we're working with client XYZ. Here's the account number. This is who we are. We're working on their behalf. But the actual particulars is how we make our money, is how we differentiate ourselves, and is our intellectual part of our intellectual property.
That's
Good
great.
question, though. I appreciate that.
Yeah, and since
So
we're
I guess I think some of your question really relates to why can we do it and
yeah
you as a client cannot do it. So you as a client, you may have 30 years of experience in negotiating sales of your cars
yeah
or your roof products or your solar panels, but you don't have the benchmark database. You don't have the industry insider knowledge
yeah
of working with these vendors. You don't know what there are vendor objections as well as client objections are. You don't know what how, which five things you want to negotiate with the
yeah
vendor in which order. That's been developed. That's been
yeah.
created over time.
And I think most of the time they purposely or I think subconsciously overlook these small expenses because if you look at it on a month to month basis, it's not that big. But if you look at it on a year to year basis, that's tens, if not hundreds of thousands. And most of the time they just try to negotiate the car that they're going to use for the company because they see the big cost uh, just hey, it's a $50,000 car. I wanted to negotiate from it, but they just see the $100 or the $1,000 bill. They don't think it's much, but yeah, it's still lots.
Yeah, it's when you're being charged $1,000 a month for waste for 10
Yeah,
locations. It doesn't seem like a lot for each location,
yeah,
but that's 10,000 a month. It's 120 a year.
yeah,
If we could save them 30%, is that $36,000? That becomes a large number at that
yeah,
point. They don't have 36 in one payment at any point in time. It's a reduction in charges. In some cases, we're able to obtain refunds for them, less on the waste side, more on some other expense categories. But the philosophy is the philosophy is correct, and there's more to it. It's not that they. It's not. It's a little bit times 10 locations times 12 months times 10 years in service in business. That's what was my example. That's over $1 million overspend over 10 years. But it's also the philosophy that that they don't know that they can negotiate this. Waste is in the back of the building. They don't necessarily see it on a regular basis, where they're thinking about their product more often than their direct expenses, their product, the customer's experiences, more so in many cases than the indirect categories. Utilities are necessary. I can't negotiate it. I get it from the utility vendor. Well, you might be able to negotiate it, especially in deregulated or not as negotiated. Find an alternate supplier for your electricity in deregulated markets. We could talk again. We could talk about that on another time, perhaps. Um, you think you want to get your uniforms and rags and linens, and they told you this is the price for your white napkin. Well, that's one of the ways they could charge you for a white napkin. How do we know? Well, our auditor, worked at one of these uniform linen vendors for years and knows the ins and outs of how uniforms and linens are charged.
And since we're nearing the end of the podcast, what advice would you give for business owners that are looking to actually save or reduce expenses? This is for the small businesses, maybe the mom and pop shops, the ones with the one or two locations. What advice can you give to them to save money?
For the 1 and 2 locations, I would do your best to negotiate with your vendors. You probably have waste. You may have an opportunity to get an alternate supplier for your pizza shop, an alternate an electricity gas supplier. Shop around. You may not have enough expense for your uniform vendor, but ask. In general, don't necessarily accept the first offer they give you. This they can price it down. there is competition out there that is more than happy to have your business because they don't know that you're not going to be a 10 location, 100 location business in a few years. They'd like to have you as a client forever. But for the medium sized business that probably is being overcharged, may not realize it, yeah, have somebody come in and look at your invoices. If there's no findings, there's no fee. If there are findings, if we are able to find you 30% savings on your waste, 50% savings on uniforms, linens. We share in the savings. You never have to write us a check ahead of any savings. The savings come out of our fee comes out of the savings. So I'd urge you to look at it and recognize that your finance team, if you're a small company, your finance manager, your accounts payable team, they don't have the bandwidth, they don't have the skills. It's nothing personal. They just don't. If you're a larger 50 or $100 million business, your procurement team, your property manager, they're doing the best job they can. It's time to partner with another business the same way you would with your accounting or your with your taxes, or your social media, or your court filings. It's appropriate to partner with a cost reduction consultant to reduce your expenses in those spaces by, on average, 30 to 40%. We could talk at length about why we're different from some of the competition out there and why we're able to achieve that we are able to achieve and why we're able to achieve a deeper cost reduction than some others. But even if you're not working with us, there are others out there that can um, save you money that you're giving to the vendors now that you shouldn't have to.
Yeah. So basically, to make it simple, it's okay to ask the vendor to give you a better rate, and it's okay to have someone look at the current things that you're paying off to.
So the worst the vendor could say is no.
Yeah.
And keep and the rate. So it's always okay.
Yeah.
However, if you're a small company, there's not a lot to be saved to begin with. But if you're a medium company, $50 to $100 million company, you can try to negotiate this in your own behalf. You're not going to be as successful as if you come in with a consultant. You don't know because you don't have the benchmark database. You don't know what cost level is. You know what is $1,000 a month in that waste example. You got down to 950. You might be comfortable saying, "Hey, I got it down to 900," but you have no clue whatsoever that their cost level is probably $400 a month. So you can, but you can't. You don't know. You don't have your property manager, your financial manager is not an industry insider and doesn't know the ins and outs of negotiating with your waste vendor. You don't know what more often than not, I keep saying you don't know what you don't know. So it doesn't hurt to ask, but you're not going to be you're not going to be as successful as if you work with a cost reduction consultant who has that knowledge. And I mentioned before, every cost reduction consultant does this differently. Not all cost reduction consultants companies out there, in fact, very few, if any other cost reduction companies out there, have their own benchmark database. Many of them have to go out and issue RFPs, and the RFP process, even for on a client by client basis, every engagement they issue an RFP and get new pricing, which not only often requires you to change vendors, which you don't want to do, but that $1,000 doesn't go down to $400. They're not going to offer you the $400 level, or the 600, whatever the example was I gave you, $600, $400 off. They're going to come in and offer you 900 or 850. So they're not as deep. It's a different process, and you might be better with them than not. But you're a little bit of a sales pitch. You'd be better with us than not doing it than by doing it yourself.
That's great. And do you have any overall advice for life?
For life,
Yeah. Just your
uh,
personal advice from your personal experiences.
you didn't ask me this in advance, John. So here we go. This is gonna be live.
Yeah, I wanted to make it, just to show up with this
Sure.
question, just to make it, really authentic at the highest level because it's your experience. I want it to be very pure.
So it's part of the reason. I think in general, the answer is a work-life balance answer. So it's part of the reason. Part of the reason. There's a lot of reasons I left the home care company, moved from New England to Mid Atlantic, but at the core of it, it's work-life balance. Do more of what makes you happy. I have to do this. I'm enjoying what I do. but I'm also balancing this with other things in life that make me happy, and do more of what makes you happy.
That's great. And where can people find you?
Thank you. So costanalysts.com. I'm hoping you'll put
Yep.
a little banner underneath here
Yeah.
with what it is, COSTANALYSTS.com. I'm Larry Levine. My phone number is 410-205-2475. Email, I think, is there as well, llevine at costanalysts.com. John, thank you. This is a lot of fun.
Yeah, I try to make the experience very fun because at the end of the day, you're spending your time with me and you don't have to. So thank you as well. And Larry, it has been a pleasure having you on the show. It's a very interesting industry, and I think every business owner at least give 5 minutes, try and look at your expenses, and maybe you can save something. You're not gonna lose anything. And hey, thank you again for joining us. To our listeners, we hope that you find this episode insightful. Larry Levine is from P3 Cost Analysts. It's analyst, it's not analysis. So I made a mistake. I
It's
think
Levine, not
earlier.
Levine.
Levin. Oh man, my apologies.
That's fun.
Yeah,
Fun.
very confusing name. My apologies. And again,
No worries.
until next time, I'm John Paul Flores, and this is the New World Podcast. Thank you, Larry.
Thanks so much. Appreciate it.
That's all for today's episode of the New World Podcast. We have explored some fascinating topics with our amazing guests, shedding light on the upcoming New World. If you enjoyed today's episode and today's discussion and want to stay updated on the future episodes, don't forget to hit that subscribe button to the podcast. And if you found value on what we have discussed, please consider leaving us a review on your favorite podcast platform. Remember, if you have any questions or topics you'd like us to cover, or if you are interested in being a guest in the future, please feel free to reach out to me via LinkedIn or email me at john.paul@aicinix.com and add New World Podcast, all capital, in the subject line so I can see it. I always love hearing from our listeners. And don't forget to check out our amazing guests. You can find more information about them by the contact details we provided earlier. Again, thank you for tuning in on the New World Podcast. I know your time is very important, and I try to always make the next episode better than the last. Until next time, keep learning, keep growing, keep innovating. This is John Paul Flores signing off from the New World Podcast.